Hi, Mark Allen Wilson here. Welcome to the video cast. This is the first of hopefully what will be many to come. We're going to talk about economics, and I'm going to start off by reading an article. This is listed different reasons why the economy, or showing that the economy is not in terribly good shape. Number one, Chinese exports fell by 11.2% year over year in January. Chinese imports were even worse in January. On a year-over-year basis, they declined a whopping 18.8%. It may be hard to believe, but Chinese imports have now plunged for 15 months in a row. In India, exports were down 13.6% on a year-over-year basis in January. In Japan, exports declined 8% in December on a year-over-year basis, while imports plummeted 18%. For the sixth time in 6 years, Japanese GDP growth has gone negative. In the United States, exports were down 7% on a year-over-year basis in December. U.S. factory orders have fallen 14 months in a row. The Restaurant Performance Index in the United States has dropped to the lowest level that we have seen since 2008. Of course, 2008, not a good year economically. This month, the Baltic Dry Index fell below 300 for the first time ever. The Baltic Dry Index is the number of container ships carrying products over the seas, North America to Europe to Asia and back again. So the fewest number of container ships moving products. Now, of course, if imports are down and exports are down, from the statistics we read off earlier, obviously there's a lot less product that needs moved worldwide. On to the next. Orders for Class A trucks in the United States dropped 48% on a year-over-year basis in January. Those would be your transport trucks moving products inside of America. Due to a lack of demand for trucks, Daimler laid off 1,250 U.S. workers. So less trucks, less truckers moving products around because we have less consumers purchasing those products. Saudi Arabia and Russia have agreed to freeze oil production at current levels. Well, we've seen a rise in oil prices from $26 up to today. We're in around $38. That is a pretty good increase. Now, I'm speculating that the reason oil prices have gone up is because others are speculating that we're going to have less oil in the future. Well, when we say a freeze in oil production, that doesn't mean dropping oil production. It means freezing it at the current levels, and the current level is too high. And in fact, we did get some numbers today. We were expecting to see inventories in oil grow 3 million barrels. We didn't get that. We got it at 800,000. So there are 800,000 more barrels of oil than we had last month, and yet the price has gone up. So supply has gone up, demand hasn't necessarily gone up, but prices have. I expect those prices are going to come back down, maybe in around $25. We will see what happens. We've had a little bit of a correction in the stock market, or what people might be calling a correction, or an upwards turn in the stock market after a terrible January and February. A lot of this has to do with the barrel of oil going up in price. However, if it comes back down, so do all the stocks in the markets along with them. So we'll see what happens. We'll keep an eye on it. It is being reported that 35% of all oil and gas companies around the world are at risk of filing for bankruptcy. Well, that's because whether the barrel of oil is priced at $25, $35, $45, $55, $65 doesn't really matter, because these companies aren't profitable unless a barrel of oil is $80 or more. So, as the price of oil goes up, they're losing a little bit less money than they had been losing, but still losing money. Don't have a lot of confidence in the oil sector right now. According to CNN, 67 oil and gas companies in the United States filed for bankruptcy in 2015. Walmart is closing 269 stores, including 154 inside the US. Now, if you can't afford to shop at a Walmart, I don't know where you are shopping. Maybe you're shopping at a soup kitchen. It's terribly unfortunate. I don't mean to make light of the situation. But really, if a Walmart store can't stay in business, I don't know what retail stores can. Kmart is closing down more than 24 stores over the next several months. JCPenney will be shutting down 47 more stores after closing 40 already. Macy's shutting 36 stores and laying off approximately 2,500 employees. The Gap is in process of closing 175 stores. Aeropostale closing 84 stores. Finish Line announced 150 stores will be shutting down over the next few years. Sears has already shut down approximately 600 stores over the past year or so, but they're looking at closing 50 more that are not profitable. What else do we have here? Best Buy closed 30 stores last year. So, retail stores not doing well. This looks to be a situation where the average person isn't making enough to get by, certainly not making enough to shop at these stores. I personally feel that taxes are far too high, and that's eating into people's disposable incomes. We have Ontario, where I live here, $308 billion in debt. We've seen U.S. cities file for bankruptcy. In Canada here, 10% of the taxes we pay go to the interest on our current debt. Now let's remember, we're paying 0.5% on our debt, very, very low interest rate, 0.5%, and still 10% of the money we are taxed goes to paying off the interest on that debt. Not to actually paying off that debt, just supporting the interest payments on it. Well, judging by this article, we're not doing very well economically. That's been something I've been talking about for quite some time. It is nice to have the numbers to back it up.